Welcome to Market Newbie again. In this video, we would like to discuss common fears all of us have when it comes to investment in stock market and how to overcome them. Might sound boring at the beginning, but believe you me, these discussions are vital to your investment career. Stay put and watch to the end of this video and get some insights so that you'll have a more successful trading career. It is believed that millennials are afraid of investment in the stock market simply because making money has become more difficult for this generation compared to baby boomers generation, and because of this difficulty in making money, losing it becomes particularly painful. Obviously, if it's harder for me to make money, losing it will be also more scary. Also, there are all kinds of conspiracy theories floating around about the stock market, which, let me say at this point, they're not all wrong. Some believe that big shot market makers rig the game to their own benefit so that they juice retail traders and take their money away. While we cannot deny this, what we believe it's not a win-lose game against us. We are retail traders. It's not that they actually are against us. These rules and these riggings are always working against us, and we're going to end up losing. It could be a win-win game if we play by the rules. The amount of profit in the stock market is so much that even if we get a small share, it would be enough for us. As a very simple example, take a look at S&P 500 ETF. Since 5 years ago, it has added 20% every year. Which bank would return you this much profit? Which mutual fund? Which financial institution? Simply, if you invested $10,000 5 years ago, you would have had $24,883 by now. More interestingly, you did not even have to spend 1 minute a day. Big players might have invested way more and might have taken way more as well, but we can also win alongside them. We can be alongside the big waves and simply ride the waves as well. The amount of profit is staggering high, and even a small chunk would be sufficient for folks like us. Okay, so let's not get carried away too much. It is easy, but it needs discipline. Most traders end up selling too early or freak out too fast if a small drop occurs. There are always questions such as, what if a free fall happens? What if we go through a bear market? What if market flatlines for a while? What if it doesn't make any move? How can I deal with unpredictabilities? Well, nobody has a crystal ball. Nobody can see the future. Well, except for the criminals who trade inside information. But it's not that we can actually see what's going to happen in future. So these are the difficulties that a trader, especially a novice trader, can see down the road. There are answers to all these questions, and the world of financial instruments have a variety of tools to combat each of these unpredictabilities. We can make money no matter how market behaves by just following a few simple rules: technical analysis, company fundamentals, single market performance, different ways of hedging, spreads, short and long positions, other instruments such as options, futures, reverse ETFs, forex, and etc. Other ways of investing and other tools. The tools are there, but it is not that those are secret weapons belonging to Illuminatis. We lose to our own emotions and greeds. We deal with an emotional market. Any news that could spread jitter through investors. Any seeming instabilities could affect trends. Market emotions are driven by emotional traders because market is made of people. Although I gotta say that there are some supercomputers that also create markets, but we'll discuss those further later. Fear of huge losses and inconsistencies in methodologies. These are the factors that affect emotions, and it'll lead you to making irrational decisions. Arrogant trading after a few wins this is one of the worst. So you end up winning a few trades, you end up making a few $1,000, and you end up being an arrogant trader, and you think that you can kill the market, but the reality is you're gonna end up losing everything you won, and you're gonna go below because the money that you have won vanishes right in front of your eyes, and this is very painful. So here's what you need to do. Remember our video, one of the videos that we shared in our channel that defined 3 different risk levels? The 3 different risk levels that we defined, you need to determine your risk tolerance and then pick a trading risk level. You're gonna go with low risk, you're gonna go with high risk, or medium risk. If you decide to invest in the stock market, come up with how much you want to invest. Assess your income, assess your savings, and then determine how much you want to invest. Then decide what is the reasonable rate of return you would want to reach. I mean, technically, if you reach the risk level, we defined earlier that you can, for instance, get 20% if you pick a low risk, low return trading profile. You need to determine that. You need to determine your target, how much you would want your percentage return to be. Learn a few trading techniques, tools and instruments, and then go in, make sure that you stick to those rules and you make those percentages, those targets, make them realities. Pick a winning methodology and sticking to it, like I said earlier, is very important. Expect a reasonable period for your return. So you gotta at least stick to one set of rules for a year, and then assess yourself at the end of the year. This is a long road you guys are going to be on. It's not like I can get rich quick overnight. This is never gonna happen. Well, if you're extremely lucky, you might as well win a lottery and never invest. You have to be realistic with your goals and your expectations. Avoid common pitfalls that are driven by your emotions. Basically, you need to have self-control. You need to be able to control your emotions as much as you can. It's not that it's easy. Even the most experienced traders, they fall prey to their own emotions, but you have to do your best. Thank you for watching our video. Subscribe to our YouTube channel so that you get updates for every video that we post to our YouTube channel. And also follow our links, follow our Facebook and Instagram pages. We will post daily updates over there as well, and we will have blogs, we'll have market updates, we'll have fundamental and technical analyses on a daily basis, and we'll post them on those pages. See you guys in the next video.